Tell us a little bit more. I mean, I feel like this is something she said, or is this a serious proposal?
So this is a proposal that she had brought up during budget hearing yesterday, and Chicago is in the midst of its budget season, and at the start of her talk related to her particular department, she talked about how she wanted to cease the direct purchases of treasuries. Just, in terms of the facts, the city of Chicago, the portfolio doesn't actually include any direct purchases of treasuries currently. The last time they owned about 8 million or so was last year in 2024. But further, she also wants to get city council approval to make some adjustments, some shifts in terms of money market funds and other types of assets that might include treasuries. She does need to get approval from the city council, as far as we know, and it's unclear whether aldermen are supportive of it. Some, one of them called it reckless. Another one questioned the sort of justification for excluding treasuries from the portfolio when treasuries have outperformed the portfolio's returns last year.
Yeah, it always comes down to the actual returns. Speaking of actual returns, let's talk a little bit about Munis and the volume of activity we've seen of late. Apparently, we're looking at a record pace of trading, and I guess this is in contrast to what we've seen earlier this year, where Munis kind of were lagging behind a bit.
Well, Muni trading is already at a record this year, and we still have more than a month to go in terms of trading. We had April when Munis was, as the organization that tracks this data called it Frenetic trading in April. And then we've been following up with month after month of really large trading volumes. Partly that's because supply has been so huge. We've seen a record amount of state and local debt sales. And then following up on that afterwards, when they enter the market and investors and dealers are trading them, exchanging hands, that has led to this record volume for the rest of the year.
What about demand? Because demand at the start of the year was not so great. There were some concerns that the One Big Beautiful Bill would remove some of the tax advantages of these securities, but that proved not to be the case. Did demand make up for all of that later on?
So we've seen inflows into the market this year of about $41 billion. And one of the things to note is that a significant amount of those inflows have been towards ETFs that focus on munis. And so the traders and investors that I've spoken with have said that all of that together, the record supply, the inflows into the markets, including ETFs as well as separately managed account, has soaked up all of that trading and all of that volume.
All right. So where does that leave us for 2026? Do they expect this volume to continue?
So the traders I've spoken with have said that supply being at a record this year, and then expectations that supply is going to set another record next year, will contribute to a fairly active year next year as well.